Check it out, we got the visionaries in the house. Open FinHack, we finna break it down. Coders, designers, all hustling in the game. Creating solutions, taking finance to a new plane. Open FinHack, we break the barriers, we set the pace. Unlocking the future, we taking finance to a new place. Collaboration and innovation, that's a style. Open FinHack, where dreams become a lifestyle. Got the visionaries in the house. Open FinHack, finna break it down. Coders, designers, all hustling in the game. Creating solutions, taking finance to a new plane. Open FinHack, we break the barriers, we set the pace. Unlocking the future, we taking finance to a new place. Collaboration and innovation, that's a style. Open FinHack, where big things soon will arrive.
Hello and good evening. Welcome everybody who has joined our today's session. My name is Oscar. I'm going to be moderating this pre-event for the Open FinHack Hackathon that is going to take place online and on-site in April 9 till April 13. So this is just a pre-event, but I think a very good opportunity for you to get into the topics, think about potential ideas that could be developed during the hackathon. So this FinTech hackathon is meant and organized to drive innovation in financial sector. So we are bringing together investors, developers, designers, and the industry experts. And it's a good place to discover different solutions to make financial services even more secure, inclusive, and accessible for everyone. So today's session is going to focus on fintech startups and funding, a very crucial part of any innovation. We will feature engaging case studies and insightful investor perspectives, providing attendees with valuable knowledge and real-world insights. So take advantage of this opportunity to better understand the fintech industry and connect with industry experts and entrepreneurs. And make sure you ask questions if you have. You can do that in the platform you are watching this stream. Today, we will have 3 speakers, and after all of them, we'll have a Q&A session. So that's the plan. The speakers, I would like to invite them here on our virtual stage. Technically, we do it like that. So Robert Bernans, VP of Connectivity at GoCardless. Reinis, Tenis, the co-founder in Jeff App, and Kevin Chavanne, investment manager at Tenity. So these are our speakers, and we will start with Robert. So Robert, the floor is yours.
All right, thanks, Oscar. Hey everyone, my name is Robert. For the next 10 minutes, I'll give you a bit of an insight on my early journey on building a Latvian fintech called Nordigen. And if there's like one tagline how to characterize my experience in startups, it literally is from hackathon to exit. So I've done hackathons, like I've built companies, and I've seen it all the goods and bads. And to tell the whole story, I think probably we would need like a very long night. But I think the point I want to explain to you is like give a glimpse on how I started my company and like how really hackathon was one of the driving forces for that. And the second part, like I'll try to kind of put in some takeaways I've had in my startup journey, because building a startup is completely different experience if you haven't had any formal experience or you have had more corporate experience. All right, without any further ado. Now, my journey started around 10 years ago in a hackathon called Garage 48. That was a fairly interesting experience. It was like a on-premise hackathon, something like over 100 people met in person. And the way it started was you had to kind of go in front of everyone and pitch your idea, right? So fairly straightforward thing. Now, the thing is, ahead of the hackathon, I had zero like technical knowledge whatsoever. So I have a finance background myself. I didn't know anyone, or at least I thought I didn't know anyone in the group of people. So I added my idea into the list. And I think my first mistake was having an idea that starts with A. So it's like beginning of alphabet. And I was the first one who had to go in front of everyone and pitch. So my first experience with startups and hackathons was embarrassing myself in front of 100 people because I didn't know anything from the technical side of things. I pitched the idea. You could see people smirking, but like I think that's my first lesson is like you'll have a lot of embarrassing experiences, and like I think the first characteristic of a founder is to have resiliency. So I didn't put my hands down, like went through my pitch. And the idea was that you have to kind of form a group of 5 people to have kind of to pursue your idea in a hackathon, and only 2 people joined my team. But luckily enough, I convinced another team of 3 people to join our team, and that's how my journey started. The idea in hackathon was completely non-fintech related. We had the idea to create a secondary market for airline tickets. So the idea was like if you change your travel plans, you can use the platform to sell your airline tickets to someone else. It took us a year to fail. So that's another lesson is once we actually built Nordigan, we were very conscious that probably it doesn't need to have a more, like you probably don't need more like a week to validate your idea. And surely there are exceptions if you're building a hardware companies, and probably there's like nuances, but you definitely don't need a year to kill a startup. And over the year, like one by one, people dropped off from our team, and in the end, there's only 2 of us. And when we actually killed the project, what we learned that we really enjoy working with each other. So that's actually how I met the co-founder of Nordigan, called Roland. And I think that's one of the, I would say, suggestions to you all is when you go through a hackathon, I would really encourage like trying to work with someone you don't really know, right? So like even if you're, and statistically speaking, like there's very little likelihood there's going to be real companies emerging from hackathon, which I shouldn't say, by the way, but if anything, I think be conscious there's like many other things you learn or that are very valuable hackathons. Like you learn things, you get to know different peers, like you meet other companies, you see like, or people working on companies, see how they think about things. So just like sounds very stupid and kind of very touristic, but like be very open-minded and like just like eat with a spoon all the things you see. And I think that's probably the most useful thing you can get from the hackathons. Now, the way the hackathon experience kind of converged into startup world was we figured that we want to work together, and we said like, okay, like we need to work, we need to leave our 9-to-5 jobs. So we went on unemployment benefits, and we very consciously met every week, where both of us had a homework. And homework was to come up with a couple ideas, and then we pitched these ideas to each other and selected a few. And every week we validated those ideas. So I think the another thing to kind of point here out is when I think about validation, get your ideas in front of your potential customers as soon as possible. I find that too many people want to build their perfect products, like perfect pitches, and they don't really spend time in front of clients. We did the opposite. Like from the day first we had an idea, we scrambled through LinkedIn, kind of like asked for introductions and like pitched our idea to different people, and so like try to see like what sticks and what don't. And like the most useful thing out of this process is it's not only that you get some early signals that like your idea might not be great, but like you can enter like this super iteration, like and iterate rapidly, like learn like what people like, what they don't like, and change your pitch and idea, because it's very hard to kind of from the get-go to kind of have a perfect pitch and have a perfect vision. Those things like are built from relentless work and pitching and working on the things you're working on. So I would never be worried that like your initial pitch is bad. If anything, I would expect that. Like our first pitches were horrendous. But I think through this rapid iteration, you learn to adjust your idea. And through this process, like we went through tons of ideas, and we saw that like one idea, kind of people who pitch the idea like they, like this idea, like tell me more. So once we figured that there's like a value proposition these potential customers thought useful, we went into building a prototype. And that's been like, I wouldn't say a motto of mine, but like we've kept this principle all through the whatever 8 years of me having the company is we went and saw the idea before we've written a single line of code. Like we even did it like when we had 100 people in our company and like and thousands of developers using our solution. Like we just like went like, we have this product, like is it something you need? And if people said yes, and if they committed to buying it, only then we wrote it. And that was like a scary process, and very often it meant like very long nights and weekends and sacrificing even some holidays here and there. But like it gave us like the ability to be super quick, right? So I think as a startup, like you have to learn that you cannot be, very kind of forward thinking, kind of slow planning. Like you have to kind of like, it's like building a plane where you're flying. That's literally how I would describe the journey. Like it's like you're like wind blowing in your face and you're trying to put wings on the side of your plane. And if you don't do it, you're just like too slow. Someone else will do it if you're frankly too slow. And I think that's another takeaway of mine is I don't think the power is in ideas. I find that there is like a bunch of people who have good ideas. I think what puts apart great companies from mediocre ones is your ability to execute. You have plenty of examples of people, I wouldn't say stealing, but like borrowing ideas and doing much better than the someone they can have to borrow the idea from. Think of even like local examples, like Walt and Bolt are like they weren't the first companies figuring out like to do a food delivery at home or doing a ride-hailing apps, right? They were like Uber doing that and Deliveroo doing that. What they did is like they figured how to apply it locally, and they were simply great at execution. So I know I'm like I'm gonna be going all over the place, but I think my takeaway, or I think things to remember is like, without me telling actually too much about my startup journey, is when it comes to hackathons, just like be mindful of learning what you see, what you can explore, try different things, like especially if you don't come from technical ground, like if you don't have technical experience, like try to expose yourself to more technical people, and vice versa. Like if you're a technical person, like just try to fit in the shoes of more business like people, like just like be open-minded. And when it comes to startups, like I think whichever stage you are, whether it's like a hackathon idea or startups in general, like get your ideas in front of customers, like talk with customers, and remember, like you have to be resilient. Like it's all about trying and pushing and hearing no. It's almost like you have to be sadistic towards yourself, but pushing through all the hard things is, I think, what makes great people succeed and being great at executing things. Now, probably I could spend much more time on telling more about these things, but just being conscious that I had 10 minutes, I'll probably stop here. And if anyone has any questions on like anything I said, or like anything hackathon specific, or anything we did in Nordigen time and now like post exit of the Nordigen, like please use the chat and send these questions, and like we can probably address them later. Now, yeah, thanks everyone. That's my bet.
Thank you, Robert. I think it was valuable 10 minutes. I think also quite personal. So thank you for sharing your insights. We'll come back to them later in the Q&A session. I now invite Reinis to the stage.
Hey, hi. Hello.
Hey. All right. Now it's your turn.
Okay, I hope everybody can hear me and see me. Sorry, I'll have to say in advance, I have my spring allergies, so hopefully everything goes well. But still, yeah, about our story. So I think I will share a bit more about the journey of actually how we evolved into the startup we are today, called Jeff. Like company, we're not that big, 40 people, but so what's our journey starting from day zero? I believe, as many participants of you there, it might resemble something like a similar path. And if you have any questions, like later, feel free to ask me. So I'll start with the fact, that behind every, not only startup, but every company, there are people who work behind it, who establish it. And so how exactly, let's say, I joined, or so what's my part in our whole Jeff fintech story is as follows. So I started my career quite long ago in credit risk and financing, so banking mostly here. I was in and around fintechs, so I was very keen on the Latvian fintech scene, on the world's fintech scene, and actually in those years, it was what 2015, 16. So the startup scene was very hot, and Latvia was established, was rapidly developing there. And there was always this persistent mantra that there is cheap money everywhere, but we lack good ideas. Please, founders, come and bring some good ideas for us to invest into it. Well, it may be not exactly true as it sounded there, but we can touch upon this a little bit later. And the dream of building something from scratch was always there, so within me, and that's how we tried to. That's how I approached that. But yeah, the whole concept of my educational background, my professional, so I organically ended up within the fintech space. However, I went from banking to a more and more corporate environment abroad, but still, the dream was alive at the end of 2018. So myself and longtime friend Tom, so current CEO of our company, we actually came back to Latvia and decided that it's time, to work on our own project, also develop the idea of what we want to build. And so how exactly the company and the idea came to us and how we made it happen. So there's not for us at least, there was not a single solution or vision that we wanted to implement straight away. It was a process of gradual building up. So we both worked for international companies that had the expansion in developing markets, particularly Southeast Asia. We saw the big markets, big opportunities, the lack of traditional financing within them. So between both of us, we had many iterations on what exactly we want to do. Of course, as a finance people, you always think about lending, but lending is capital intensive, and you iterate into something, more MVP type of thing that you can test and iterate. And then, we came up to this concept, that aha moment, that our background, we talked to potential customers, as Robert's already mentioned, so would they be interested? And yeah, we ended up into a marketplace for you to understand what we do. So we ended up as a marketplace to help unlock access to financial services for the world's underbanked, meaning, those are huge markets, huge prospects, huge growth. So there's this organic drive for the products themselves. And then it's a matter of building and how you do it. And that's how we ended up here. So it started in Latvia, servicing over several hundred million people. So we're talking about Southeast Asia, emerging markets, and also Latin America. And our product and development team, that's how we ended up here. So long story short, 4 years later, so where we are, so we're a team, as I mentioned at the beginning, not a very large team. So we're 40 people, and covering markets like Vietnam, Philippines, Indonesia. But now I would also like to touch upon the hackathon experience, which helped us as well in our, let's say, mindset as a startup and a company as per se, because what we did, our hackathon experience was at the end of 2020. So when our company was barely a year old, we were 6 people. So it's not that the inception happened, so it was already during the process. So we decided to join. And why we did it? Because we understood that we were always focusing on something that, daily development items, but we wanted to test something exciting. So meaning that it helped us to mobilize our team of 6. So we came together for 72 hours. We just thought about, this one particular problem for our customers that we want to solve and what is the solution. So pitched all the ideas, super focused, laser sharp. And it really came out. So it came out really good. So we managed to actually test something that was outside of our scope of operations usually. Honestly speaking, so later on, did it transfer into a successful, let's say, business side of that? No. But it really helped us in our thinking of, hey, crazy ideas, let's test them, scale them, develop them. So analyze what worked, what didn't, and pivot or, kill it and work on something next upon it. From my side, currently, that's going to be it. And I will be very happy to answer about the path, so from startup founding as well into our hackathon experience is already, let's say, early stage company within it. So that's about it for myself. Thank you.
Thank you. Another exciting story to follow. That's very interesting because usually we have those sort of pink glasses when entering business communities and thinking about our own businesses. But then, if you reflect on the past, it's a bit different shades. Probably not that pink anymore, but still very valuable for all our audience members today. So make sure you ask your question in comments section if you have something to ask to our speakers. All right. So the third speaker today, before we get to the Q&A, is Kevin Chavanne, as mentioned before. Hello.
Can you hear me?
Yes.
Cool, because I changed microphone. Thanks for having me. I think I'm going to be showcasing another side of the table since we had two founders, and I am working for an investment fund, and I'm trying to figure out how to share screens. And I have a presentation which makes me feel a little bit stupid because maybe I should come and just outspeak my story. Do you see my screen?
Not yet. It's coming. Yes.
Cool. All right. Nice. Thank you. So yeah, I mean, I'll tell you a bit about who I am before getting into what I do. I was born in France and I moved out of the country to come to Estonia in 2012. And I didn't know much about startups until I worked for Funderbeam for many years, which was a startup and an investor at the same time. So I kind of like saw the both side of the story for many years. I first worked in Estonia and I opened the market in Spain and Portugal. After that, moved to Scandinavia to launch the Scandinavian market for Funderbeam. I invested with Funderbeam in maybe 50 or 60 companies via the crowdfunding model, which I think is super cool. And I'm very happy to speak about that because this is essentially one of my specialty over time, working with the crowdfunding methodology. After that, I worked for a French fund, which was led by a very famous French investor called Anthony Bourbon, the head of Shark Tank France. And more recently, I joined Tenity, which I'm going to be speaking about and representing today and for many years to come, I hope. Tenity is more than a VC, and I really want to get onto that because it's a very interesting model that I have never really worked for before. As in, Tenity originally was born out of the Swiss Stock Exchange as a corporate innovation program, meaning that we worked with the Swiss Stock Exchange portfolio and a bunch of corporate companies to create, nurture, and sustain the Swiss fintech ecosystem. We were providing a roof, expertise, and a network to the early stage startup ecosystem of Switzerland, out of Zurich. Over time, we realized that we were actually pretty good at what we were doing. So we thought that we should be running our what we called incubation program to bring in companies, bring in founders post-hackathon for just newly created teams and provide them with an opportunity to gain value outside of the direct capital investment that you would think about, but through our network and our connection with the corporate sector and kind of match the need of corporates with early stage innovation. We did that for a couple of years, figured out that it worked really well. The synergy between the corporate companies and the early stage companies was making a lot of sense. We exported that model and launched a hub in Singapore, where we became pretty big. Singapore being a pretty big financial place, and over time grew pretty much into 6 different hubs, including the Nordics. We launched last September, Israel, Spain, the UK through our acquisition with Hackwater. But more importantly, last year we launched an investment fund where the idea is to cover the entire life cycle of an early stage company by providing the incubation, the acceleration, the knowledge, and the network together with the capital that we can inject to grow these companies to a stage where they become relevant to corporate companies. So over the years, our corporate network, which is constituted mainly of banks, insurance companies, financial stakeholders, in the end of the day, aggregated into a fund, a €100 million fund that invest in pre-seed, so very early stage, and seed, fintech, insurtech, We conduct investments through our acceleration program, meaning that every company joining the acceleration program will, by definition, receive an investment, and I will touch this upon later. But the purpose of the acceleration is, to bring the knowledge and the expertise, but to use the time of that program to connect the investment opportunities that we create with our network, to grow these companies into becoming fit to integrate the financial marketplace around the world. Among our partners, we have, UBS, Julius Baer, the Swiss Stock Exchange, who has been supporting us from the very beginning, generally as insurance companies, and a bunch of other tech, insurtech, and fintech ecosystem players that are constantly looking into our accelerated and investment portfolio to look for innovation they can either buy, acquire, use, or serve, essentially. So over the years, we have created this global ecosystem, launched our activities out of Tallinn, Estonia, with the objective of looking into early stage innovation, create investment opportunities, and deploy our capital onto this ecosystem and these startups. We've had, a bunch of successes. I think we have over 200 active investments. Over 1,000 companies went through our portfolio. Among successes, you have Yokoi, the spend management platform. They raised 80 million last year. Keynotes, which did Kirok, who did 72 million, and a bunch of other cases I'm not even that familiar with because my portfolio, the Nordic portfolio, is fairly young. So yet to see exits and additional funding, and hope to see potentially some of you, hackathon participants, be part of our portfolio, receive our investment, and become success stories for us to showcase, to our network. A bit about our investment strategy. So this is a very long conversation on how funds operate. We have our investment thesis. We have our investment criterias, but essentially we want to deploy 50,000 euros in every single company joining our acceleration program. Each acceleration program is up to 12 companies, early stage. Once more, it can be pre-MVP, it can be idea stage, it can be post-MVP, anything which belongs to the building of a seed round, if you will. Ideally, the later stage the company is, post-MVP, when there is something to showcase, we can do a lot because we can showcase these MVPs to our partner network, to our VC friends, and create that opportunity to be more valuable for further investments. We have 3 programs every semester, one in Tallinn, one in Zurich, one in Singapore. Each 12 companies, each companies receive 50,000 euros. Like I said, we work with idea stage, POC, pilot, MVP stage, anything pre-seed. We technically invest all around the world. We have a very strong interest in the Baltic states companies. So if you feel like talking to me, I am very happy to jump on a call or come down to Riga or anywhere you are if you're from the Baltics. We do fintech and insurtech. That is our DNA. We've been working with that industry for many years. Yet it is to be understood that we are working with the banks and the insurance companies, and they often need tools and services which don't always, which are not always defined as being fintech or insurtech. Sometimes, you may have companies in the legal sphere, for instance, who can bring a lot of value to the legal department of bank. But well, you got my point. Anything that a bank or a corporate bank may need makes a lot of sense for us to work with. Our main value added, like I said, is bringing in early stage founders and connecting them with our network of corporate VCs, mentor, advisor, and creating that momentum that investors are actually looking at. I'll speak a lot about the criteria as we're looking into when making an investment. But one thing that came to my mind while listening to previous speaker is that in the end of the day, we are investing in opportunities, and opportunities come with a momentum. And that is what we try to create through the program, is to create that momentum. We invest 50,000 euros on day one. We work with the companies into creating investment opportunities, which are then shared together with our VC network, with the hope in creating seed rounds where we want to invest 250,000 euros to continue the growth of the company. We have mandate to invest further up to €1 million at later stages, but that's another story. The idea for us is to create investment opportunity where we can drop in a bigger ticket as a co-investor with a lead investor who wants to work with our portfolio companies. Like I mentioned, I was asked to kind of break down the criterias, or at least the investment criterias that we're looking at when making an investment. Like I said, we're doing pre-seed, so it's very hard to, define or at least invest in hard as rock business models. Often case we're investing majoritively onto a team rather than a clear plan. Things change a lot even during the acceleration program. But well, I broke it down into what I hear hundreds of pitch every month, and this is what I usually look at for you to have an idea on how to draft your idea for the upcoming hackathon. So you all know the idea of connecting your problem with your solution, describing your market and your competition. What's very interesting about that is that I see a lot of founders who are just independently speaking about each block. This is the problem, this is the solution, this is the market, and this is the competition. But there is a lot of time, a big lack of creating a story that really unites these four components into a single entity, a single synergy that flawlessly is being discussed as one. We just had today our startup pitching, and when they're pitching, you feel that there is a lack of consistency in connecting these four elements. So these are the four core components that we're looking into. Is the problem relevant? Are you solving an actual problem? Is it a vitamin that you bring in? Is it a medicine or a vitamin? This is what you will often hear. Is the solution viable? How big is the market? Obviously, as you should know, VCs are taking a lot of risk, especially at pre-seed when conducting an investment. There are statistics that showcases that 97% of our investment are actually going down the water. Only the rest succeed, and whatever succeeds brings the return on investment that we expect. Therefore, when making an investment, we're looking at very big market, high scalability, and high potential of return. This is a whole topic of conversation, but what you have to keep in mind is that when talking to VC investor, always remember the concept of the power law. The idea that only one of our investment out of 10, 15, 20 investment will return the money we put on the table. So it has to be big enough and the return needs to be huge. Market size is extremely important. Competition, how do you compare to other investors or to other companies, and what market do you essentially play in? These are the core components we look into. I see there are questions coming in, but I suppose we should be taking them after. Otherwise, I will stay online for an hour. To this question, you add a level of complexity, which how do you unite the solving of the problem and how do you make money out of that? What we call the business model. How do you generate an equation that allows you to bring in an output to the solution, the problem you're solving? Reliability of the business model is something we look into and are very careful about. At our stage, we understand that it's never perfect and we're here to help. And this is the role of an investor, to bring in the smart capital outside of the core direct investments. We add to this another level of complexity, which is, in my opinion, very important from day one, is the go-to-market. How do you approach the market? How are you going to reach out to the customers you want to work with? I had a company today from Iceland. They were presenting the product and they tend to put aside the importance of go-to-market. Iceland is such a small market. I need to understand even early on, where are you going to go? The company in question is doing legal. They need to explain me what is the strategy to hit a new market and what is going to be the questions around this market. Legal tech, jurisdiction, and regulation is very important to think about early on. On top of this, you had the question of scalability. Like I explained, the concept of power law. It's very important for a VC to understand to what extent you are able to scale. So these are questions you need to answer from day one and start thinking about day one. The financials and the funding plan, what does that mean? I don't expect any early stage post-hackathon founder to come around with clear P&Ls, projections, and whatsoever. But I like to understand that the entrepreneur has an idea on what is the funding plan, why do you need capital, what is the grand plan, and how can I provide you fuel, the capital to help you reach the heights that you have aimed for. These are things we always take into consideration at Tenity. What is the long-term plan, the roadmap? I always say that there is the product roadmap, but there is also the operational roadmap, which includes why do you need to raise funds even? To whom are you going to go to? What is the instrument you are planning on using to raise funds in the next couple of months or year? These are topics that need to be clearly understood to showcase their ability to lead a company. And of course, the most important at our stage is the team. 80% of our decision making in the end of the day comes down to the team. And these are very qualitative questions, as in, do we have a team founder who has experience? Why is he the right person to solve the problem he's questioning? Do we have synergies between the founders, a tech guy with a sales guy? All of these questions become extremely relevant when making an investment decision early on. You need to be able to justify your presence in the market, your ability to lead a company, and often in case even investors forget that, your ability to lead a company with maybe hundreds of people. These are the questions that we're looking into. In addition to that, I like what one of the previous speaker mentioned about the network. This is something I actually look into. Are the founders I'm speaking to well connected? Do they know people in their industry? Are they well connected with other investors? Are they able to create a momentum in growth? Again, like I said, we're investing in companies and in hard truth, like I'm showcasing on the screen, quantitative information, but there is also the aspect of investing in a qualitative opportunity, which is essentially the momentum, the hype you're able to create around you through your network, etc., etc. These are topics that needs to be addressed when speaking to investors, or at least will be questioned by investors. I broke down a list of potential questions that you may be asked, at least at our stage. These are questions I usually ask the companies I'm meeting, broken down in different components: the markets, how big is the market, is it growing, what are the regulatory barriers, etc., etc. The team, just spoke about that. Did you have a previous funding experience? Do you have complementary skill set? Are we looking into a CTO working with a CEO, or is it two CTO working together, which sometimes can be problematic? The product, is it a medicine or is it a vitamin? The traction, well, obviously you are at a stage where it's too early to speak about ARR or paying customers, but you can speak about recognition as hackathon winner, being part of an incubator or an accelerator, signing LOIs, having customer interviews. That kind of stuff always are relevant for early stage investors like us. And of course, the deal. How big is the round? Do you actually understand the concept of fundraising? These are things you need to educate yourself when getting in to speak to investors, essentially. Now I try to also think about a couple of points which are particularly relevant in the fintech industry. I'm actually pretty new in the fintech industry as an investor. I used to work at Fundravim, which is a fintech company, but we were doing agnostic investment. But I'm looking into the companies we're working with and the previous screenings that we have been working with, and things which we need to look into before making any investment decision, things that could be a red flag for us. One of them is the understanding of the industry. Fintech is a very complex industry. Having experience in that domain is very relevant to us. And most important of all, once more, is the network question. We have many investments which were supported by founders who were working in an industry that they want to target. Therefore, they already have the connection within that industry to get the legitimacy they would need in order to sell their product. The financial industry is based on trust. And speaking about these topics early on is very important. That is securing your strategy in terms of security and ensuring that long-term legitimacy is going to support your growth. Market regulations and compliance, we all know how complicated, regulated is the financial industry. Therefore, having a plan upon that is important to be disclosed and taken into account when speaking to investors. Many companies come in and they realize that they need to get a license which costs €1 million, and that completely destroys their plan. So having that understanding of the market regulation and the need of compliance is extremely important. Adaptability to regulatory changes, very similar to the previous question. You need to be able to adapt, not specifically on the changes of regulation over time, but also the changes of regulation upon jurisdiction. If you are launching a product in Sweden, how are you going to do when you're launching in the UK? Or what are going to be the implication in terms of regulation in a new jurisdiction? Too many times I hear early stage founders not really having a plan on growth and scalability. And when we start to speak about that, they realize that the regulations are so different in other markets. So this is now something we're always looking into very early on. Do they have a plan of growth elsewhere? And if so, can they actually do it from a regulatory perspective? These days, there are more and more harmonization of regulations in the EU, but there's still a lot of work for the policymakers to be done before having a single market, especially in the fintech industry. So these are topics you need to break your head around. Ability to leverage strategic partnership, that is something we really like as Traction. Often case coming from the network, your ability to not sell anything to a potential MasterCard or Tenity or whoever, but to create this partnership to allow you to access this network. When we're making early stage investment, you would be surprised to see how many companies without a product still manage to sign partnership that sustain trust and legitimacy. And the last point, I already spoke about it for some reason, but know the regulation in your next target country, and you should know your next target country the day you're speaking to investor to raise your pre-seed. I think I spoke a lot already. As I mentioned before, Tenity is looking for early stage fintech insurtech company in your region. We're looking for company pre-MVP, post-MVP, looking into building a seed round. Our program will start in September, next September. We will be investing €50,000 in all of the companies joining. You can already apply. I dropped you the link through the QR code. Very happy to discuss your projects through the hackathon, look into what you want to build, and help you craft something that could be relevant for us and for our corporate partners. Thanks, guys.
Thank you, Kev. Thank you. I now invite all the speakers on the stage so we can hold a Q&A session before we leave our computers, hopefully. So let's start with the questions from the audience. There's a question to Robert. That's a nice one, I think. So what was the best moment in your startup journey?
It's a good one. Now, I would say there's been plenty ups and downs and gazillion highlights, but I think when it comes to things I've enjoyed, I think you have to learn to enjoy the process, right? So it took me some time to figure out like what are the things I enjoy in startup, and already all the highlights on winning competition, selling company, and everything. First and foremost, I enjoyed building building things, like seeing that you can build something that someone else needs gave me much better satisfaction than all the on stage things or public recognition. So I think it's like really the 10-year process that I learned to enjoy rather than these kind of small spikes that you would normally associate with success of company.
All right. There's a question to Reinis. How and why you started your business activities outside the European Union?
About this, so just a little recap on that. So our business model in general, so what we do is we create a marketplace where the underbanked consumers can get better financial products, and how we do that is by utilizing alternative data, right? So in sense, in the EU, as a premise. So we have a lot of, let's say, traditional finance data. That means essentially credit bureau. So within the EU and the developed world, the credit bureau coverage is quite good, very good. So 90+%. And so the business model itself is different than as per se. But when we look upon, it's already from our inception at the beginning. So why we chose it and why we chose particularly Southeast Asia, it's because of, we take into account just like macro trends as per se. So we're looking at the population growth, we're looking at the economic growth of how consistent it is, and where it's moving towards. So the macro trends are very good. So we look at the mobile penetration rate, where the young population is actually using the mobile phones, and so the engagement with the users is much more proactive in that regards. And yeah, just in general. So in comparison, the emerging markets with the EU, so the ones who are developing more rapid and more faster are much more exciting with bigger, hundreds of millions, even like, billion population. So that's more exciting to serve rather than to start within the small Baltic scenery of 6 million people, I believe. That might be the extended, longer answer.
Very good. Let's stick with you, Reinis. I'm just curious. You mentioned that you had, many iterations. So what to do, like lending, but it's too capital intensive and so forth. What about hackathons? Probably I missed this, or you did not mention. Did you mention? I mean, have you had any experiences that hackathons influenced the development of the Jeff app?
Yeah, I briefly touched upon at the last part. So what we did, so in a sense, as a founding team, so we were two, so my co-founder Thomas and I, and later we also joined by our technical team members, so CTO. So we didn't participate in hackathons per se. So when we created the companies itself, so we had this idea and understanding at the beginning. But so when we were probably like a team of 6, so that means 9 months we were already operating. Then we joined the hackathon, Super Angels, Estonian organized, and why we did it. So essentially what we wanted to boost, we wanted to test some hypothesis, some crazy hypothesis that we did not test during our normal business day. And this, I will maybe a little bit repeat myself, this mobilized our team of 6. So we focused for 72 hours, and we had the crazy idea to test some crazy concepts. So would they work, would they stick? And that's how we proceeded. So we already had some user base, we could test, we could validate, we could actually iterate, and then that's how we ended up in there.
All right, Kev, we have several questions addressed to you. So, will your investment work as equity or convertible loan? So, what are the terms about that? And also, is this all hard cash, or participants have to pay for the program?
Very good question, and sorry for not clarifying all of that live. I didn't have that much time anyways. We are investing a convertible loan, 50,000 euros, 2.5 mil cap, no discount, just a maturity date. The reason why we're doing that is because it allows us to get the right to invest at the same terms as the next investor for the seed round, meaning that the first is always a convertible loan, and the next bigger ticket down the line is dependent on whatever has been negotiated with the lead investor. It could be equity, it could be a safe, it could be a convertible loan. Really depends on what is the structure and the opportunity. There is a fee to join the program. It's 10,000 euros, always paid after you actually receive the investment. So in the end of the day, it's 40,000 euros on top of obviously the network, the lectures, the time we spend connecting you with the banks, etc., etc. To give you an idea, we're working out of SEB this semester. So we try to bring a lot more than just cash, just money. And I see there is another question that came just down after the FD. What is FD? What does it stand for? It means fully diluted. Fully diluted in opposition to outstanding is a pretty interesting concept that I think should be understood in relation to cap table. Fully diluted means that when you do a convertible loan, you are getting cash in exchange of a promise of equity in the future. Therefore, fully diluted essentially means the promise of equity, how many shares is going to be in the future. This is what FD stands for.
All right. What about the batch 4 you mentioned and the applicants? Is it a lot of interest currently?
Well, we launched the application unofficially last week. So it's the very beginning of the application. It's the right time for you to get my attention, because more time goes, more you have a lot of application coming from everywhere. I think the last batch we had over 400 applications in the Nordics, and we selected only 8 companies.
Oh, no, that's quite
We
impressive.
hope to select 12 next batch to increase a little bit the capacity, because we have bigger space now that SCB is lending the whole 4th floor.
All right. And now many people work remotely, so have more space, right?
Well, we have out of the 12 weeks of acceleration, 4 are on site, meaning that every first week of the month, we want all of the startup founders to be on site and work with us on site, because we have business central networks, we have VCs who come around and kind of mingle a lot. And in the end of the day, true relationship are built in person. And also because, like I mentioned, we're not just a VC and an accelerator, we are a community builder. We want to create an ecosystem for any stakeholders to kind of mingle. Like once I heard I was having a conversation with our CEO, and he was telling me, Kevin, the way you have to conceptualize what we do is that we are running a nightclub. We bring in elephants, the corporate and the VC, I guess, and we bring the mice, and we just have them dance and hope that something happens later at night, right? So we need to have these events being happening in person, I believe. So we need a lot of space.
Right. Oh, makes sense totally. So, few more questions before we get back to Reinis and Robert. Well, probably there are quite many, but maybe you could mention top, I don't know, 2 or 3 pitfalls that you see fintech startups falling into when seeking for the investment. I mean, and what should be done to avoid these?
Okay. So I will speak about late experiences, good founders, but the problem is that they are, sometimes fintech people, they are geniuses and they want to do so many things at once. The guys I'm speaking about, they had so much in mind, they had so much plans that they have difficulty streamlining a single streamlined roadmap that makes sense. They want to be all over the place, and these are things that need to be considered at very early stage to make sure you have a roadmap and that it is clear that you want to achieve step-by-step growth, not do everything at once, because this often scares off investors. Another problematic is, like I said, the regulation questions. I've seen too many startups, especially in the crypto, digital assets, and fail because of not questioning the regulations enough early on. And they understand that it requires full compliance, investments, etc., etc. That's problematic. And another problem that I see a lot is the lack of scalability, actually. Like they don't do the math and they don't understand that as VCs, because we're taking so much risk once more, we need to see a pretty big return on investment. And for that, you need to calculate it in advance, as in you need to understand how big is the return you can bring to investors.
Right. Have you had any experience in hackathons yourself, or maybe,
It's my first one.
All right.
It's my first hackathon. Yeah. I was working more on the seed stage before, and it's like now I'm working on the pre-seed, and I'm actually very excited about the hackathon, because if you bring the right actors around it, you can actually tailor companies based upon needs that are identified by people of a specific vertical or sector. So I think it's pretty cool.
Right. I love that our discussion today have those, two major stakeholders in the whole process. I mean, startups and founders and the capital representatives. Robert, Rainy, maybe you could reflect on this about your companies or previous companies that you have had, about most significant challenges that you had in your journey. It's a broad question, but probably we can narrow it down to our today's topic about financial technologies.
I think it ultimately comes back to a few points Kev raised, right? So it really kind of falls in the same buckets. The pitfalls like would start anything from not having the right founding team, right? So you need the right people around to build the company, right? The focus is a big one, right? I totally agree that people often are all over the place and lack a coherent focus, like a story around like what really they're solving, right? And also what Kev said, like this kind of loop of things, right? It's like we have problem solution, like all these things come in a coherent story. So like to answer your question, I probably made all those mistakes, right? Maybe with the exception of having the wrong founding team, right? So when I started 10 years ago, like we didn't have all the I would say the infrastructure of accelerators and incubators in place. There were some kind of prominent things in Western Europe or in US, but like there weren't access to this information at that point. So we stumbled upon all those things. And I think my suggestion would be like use these opportunities to kind of figure like why Kev is saying these things. He's not saying because like just to sound smart. Like there is a reason why investors are asking for these things, and it most likely illustrates like the pitfalls usually startups have.
Yeah. Okay. I guess I will add on top of that. So then I think we're still building, developing. I don't have a clear answer since to everything and actually maybe to anything, but. The biggest problem, and at the beginning, at our current stage, is really the focus. So what I could say, really, what Kev also mentioned here, and Robert. So I mean, when you're starting a company, let's say that the focus is there. So what's your mission, vision? So where do you want to go? So what do you want to test? Because everything around you sounds exciting. There will be a trend of this, a trend of that, so that like it's very easy to start something and maybe to continue, but it's very difficult to complete something until the end. So whether it's a fail or success, right? So we're talking about the focus, meaning like a company focus, a project focus. So a project within the company that you're taking, if you're diversifying. So all these things. So what you need to do, you need to establish, you need to understand that, hey, why am I doing it before you start actually doing something? So have some hypothesis clearly outlined. So what you want to do. So pivot at any moment, but really focus until it fails or until it succeeds. So in a sense, this is my main takeaway from the story so far, what we've been building.
Right. Considering that fintech landscape is actually changing quite rapidly, how do you stay competitive and how do you kind of continue to innovate in Jeff app?
Is that to me or to
Yes.
I think you're the Jeff guy here, Reinis.
Yeah. I mean, it's a very, very interesting and broad question here. So, well, I think the key is also talking to customers here. So essentially, so we need to understand the trends of our current customers, so our existing new segments of focus. It's a combination of where the market is heading and what our customers really need. So in our sense, so the customers are the B2B side and B2C. So we're as a marketplace, so B2B2C. So essentially, how do we serve all these parties combined and where they're heading? There's no clear, straightforward answer. So we just believe in what we're doing so far currently. So we're iterating, building on that, and again, I think I'm repeating always and always. It's just like be ready to adapt, to change, to iterate, to place. So this is actually how we also came up to our company name called Jeff. It was one of our initial iterations and pivots because at first we tried to build a customer-friendly chatbot that would answer your questions, but we quite quickly pivoted from that, and this is but the name still stick with us. So this is just a good example of what I'm trying to persuade here.
Well, it's good that you mentioned that because I was always wondering why the name. I mean, Jeff, and I never had the opportunity to clarify this. So thanks for that. My next question goes to all of you. So just feel free to jump in if you have the answer. another broad question. So, what about the trends in fintech? What are you guys the most excited about the upcoming things?
Phew. There is two main things that I'm curious to see. First off is obviously AI. You would be surprised to see how banks are working with Excel manual file in any departments. And I think the introduction of AI will obviously revolutionize the entire industry. For now, it's a lot of dust all around. We have to wait until things cool down and set down to see what works, regulations and security around that. But I mean, obviously, I think this is very generic of me saying that, but AI is definitely going to play a role in how do we handle finance. And the other aspect I feel is blockchain. Why? Because blockchain has been around for so long, but there was not really, I mean, blockchain, digital asset, and all this kind of stuff, right, has been around for so long, but huge lack of confidence from the policy making and public side, therefore no legitimacy, therefore very hard to actually implement. And on the crypto side, you have a lot of lobbying from the traditional financial industry that doesn't really want this to happen. But looking at how EU and many countries are framing regulations around this, it looks like soon we're going to have a more organized industry around the use of blockchain, crypto tech, digital asset, etc., etc. I think these are the two main things I'm looking into right now. And yeah.
Okay, who's next?
No, I mean, like, it's very hard to miss megatrends, right? So, I mean, I completely agree that like blockchain was a megatrend, AI is a megatrend. I think the AI is interesting because you don't see a lot of those services work background. You don't even notice like how your life is improved, right? I think that's probably the least intuitive part about the AI trend. Yet there's like gazillion AI companies popping up, and probably Kev is in the best position to judge on that. But I think irrespective of these megatrends, like I think generally speaking, you always come back to kind of these first principles of like customer first, right? Like there's going to be more and more apps and services that are tailored to improve the specific customer experience. Like I think things you see much more in US and less over in Europe is you have these industry or kind of customer type specific applications, like neobank for teachers or whatnot, right? So I think you'll see more and more customization, more and more like tailored products to specific groups of people, which I think is not a trend itself, which I think is a derivative of these megatrends such as an AI. So I like maybe like if the suggestion at all is I think it's worthwhile to always play around with the kind of new technologies and kind of see what trend can bring you, but ultimately it comes back to clients, right? So think like what value these type of technologies provide, and can it add any, like, is it like a medicine or vitamin, right? Like is AI a medicine to specific problem, or is a vitamin, right? So if you can figure out like how to apply AI on a specific thing and it's a medicine, go for it. I think that's a good edge to try and pinch and see if there's anything worth it.
Yeah, from my side, I mean, the next big thing in fintech, I would say Jeff, but I guess it doesn't count here. But honestly, like I don't think I can share a lot. The only thing that on top of what has been said, I wouldn't like to particularly highlight any sector or field, but just a food for thought. I think the most exciting things within the fintechs is something for the next founders or people here, like to think about what is irritating and what has been done, in the most old school things that's been done, what can you really come and break, and how can you make the process much more convenient and faster for a consumer, for B2B, whatever that is. So, like I always like that there is within any let's call it fintech vertical or other vertical, that that you can come and you can disrupt the things, because they have been doing that for the last 50 or 70 years. Excel is a very good example, but there are many other things as well, like
yeah, it's a very good point.
or
It's a very good point you are making, because I was speaking with one of our founders. It's more insurance rather than fintech, but I think it's the same in fintech. Is there, when you're dealing with insurance, oftentimes insurance is so fucking boring. Like, do you read all the lines on your flight insurance policies or even your life insurance? It's so boring. And if you think that way, you are probably looking into a vertical that needs to be disrupted. You know, does it mean it's going to be big? Does it mean that you're going to be clever enough to put out a good business model around it? I don't know, but it means that there is definitely something to do about it. And exactly like you said, there is a lot of verticals that need to be disrupted because they have been going on that way for so long. Doesn't mean that people don't want to change them. I think the user profile have changed a lot. I mean, we're fairly young in this chat room. um, Life insurance have been the same policies for our parents, pretty much. You know, the way it was sold and formatted. That's an example, and it's the same in so many sectors of the finance and insurance world.
Right. A nice example about insurance policies. I mean, just I always thought that somebody should say this out
Yeah,
loud. Yeah, and should
yeah.
solve it. I mean,
I had a company we invested in called Quick. They're a Norwegian company. They're doing B2C travel insurance tailored for younger people, right? And we were going through the UX UI of existing travel insurance policies, and I'm like, I never read any of those. Sometimes you pay $10 extra on your ticket thinking it's going to protect you. You don't even know what you're covered for, right? And all of this kind of stuff is so heavily boring and needs to be disrupted. And there is a lot of money to be made because it actually helps people to be insured. It's, you know,
yeah, it is boring, and attention spans probably decrease because of the new technologies and the new media. So yeah, a
yeah.
nice example. Probably some good ideas for our potential hackathon participants as well. All right, I'm watching the clock now. I think we can close with the final question to all of you guys again. So, what sort of advice would you give to fintech startups looking to make their mark and attract investment? That's probably more to Kevin, but then again, from founder's perspective as well to Reinis and Robert. Yeah.
Like, I think like you have to be mindful. Like, you can twist like the presentation of Kevin and can turn it other way around, right? So um, again, like, think of it like there is a lot of people in the room and they're like trying to get Kev's attention, right? Sorry for mispronouncing your name.
You can
Kev's
call me
attention,
Kevin
like,
as well. Don't worry. I was just too lazy to type my whole name.
and the you also like you have to stand out, right? It's not only like obviously there's like hygiene things and like you have to follow all the steps and you need kind of fit all the kind of buckets on, like, you know, problem statements, team, and so forth. But like, again, coming back to thesis, like only 1 of 10 companies in a VC's portfolio succeeds. Like, how do you look like this one company, right? And I think that's the hardest part is if you want to go this venture capital world, like you have to figure out really this outstanding thing you have in a team. There has to be at least something that makes you special. Like, do you have great alumni of whatever super great companies, which I'm not suggesting is a great thing to have, but like might be an angle, right? So specific experience no one else has, like on building similar types of things or kind of working similar type of industries. Like it's a tough world. There's like a lot of smart people with good ideas, and like just like spend some time and figure like what's your competitive edge as opposed to all the companies around. And there's no easy answer. If there would be much more unicorns around there, but it's like it's a tough thing. And yeah, just like be mindful. Like if there's a system, like you can always game the system, right? And then try to find the hacks. Like think what you're special, where you're special in.
Yeah, from my side, what I can say that, you know, there's this maybe a good concept. You can always talk and you can get the free advice from everybody because people like to talk, right? And ideas can be stolen, but execution cannot, essentially. So don't be afraid to share with your ideas. Talk with people around it. You know, I mean, yeah, I come from Latvia and Baltics, where, you know, there is this mentality. Oh no, if I say my great idea, somebody's gonna do it. Well, that's more or less almost never true. So don't be afraid to speak out to get some insights. Is it from networking perspective or something else? But yeah, and about the execution to maybe make it to move a bit couple of steps forward. It's like at least from my side, what I saw approaching investors, it's always good, and it shows something that you're doing something. You're not just building presentations and ideas, but you're testing MVPs, having the first results, doing something to show the data behind your idea that it's probably a case to invest. I think that's always something that stands out from just a blank pitch. That's the two main takeaways I would like to highlight here regarding this.
As for me, I think I relate a lot with what Robert said, especially like I give a lot of workshop on how do VC works and that kind of stuff, and what I realize when just telling people how VC works, I realize that many early stage companies, they forget that when they receive cash from an investor, they don't just receive cash. They're selling part of their company to somebody they potentially don't know, or somebody they potentially don't vibe with, and who's just going to be going to be working with you the whole lifetime of the company if the investor doesn't sell his shares. But anyways, you get my point. People tend to forget that they're selling part of their companies. That's it. That's a very stupid and simple concept. But if you truly print that into your head, then it means that you will be looking for somebody who makes sense, somebody who brings money, but also brings a network, who brings a vibe, who brings advices, who brings, value outside of just money that is very volatile. Money is going to be gone in 12 to 18 months if you've planned your runway properly. But then the guy is going to be there hanging around with you and potentially shit with you during board meetings and whatsoever. That's one thing. The second thing, if you print that correctly, then you will understand how to raise money. You are selling part of your company. So if you are selling it, what kind of product do you want to share? What if you're on a market, do you want to sell AliExpress very bad product, or do you want to sell something of quality, something that you're proud of? People tend to forget that. Just the simple facts, I feel.
Yes, a lot of food for thought. Thank you guys for that. Yes, I appreciate your time being with us today for our audience, people thinking about participating in the hackathon. So thank you very much for joining.
We're done already?
Thank you.
Yeah,
we can stay here for a while.
It was 7:30. Okay, cool. Well, thank you for having me. I hope I added any value to the conversation.
Yes. For our audience, just a quick reminder about the hackathon. So all of the information is in the openfinhack.com, openfinhack.com. So you can decide on your participation until April 4, which is the deadline for applications. Reminder about the dates. So it's April 9 until April 13 when the hackathon actually happens. So you still have some time to make a decision. Before the hackathon itself, we have another pre-event on April 2, same time, 6 o'clock in the evening, Riga time. So it will be dedicated to the topic Open FinHack challenges and business cases. So this pre-event session will overview the key themes and challenges driving innovation during the hackathon. So whether you are passionate about crowdfunding, maybe fraud detection, smart contracts, data insights, personalized banking, or financial literacy. So this session will offer you valuable insights and inspiration as well to help you to prepare for the hackathon. So make sure you book your time in 1 week, same time, same place, or quite the same place, online. All right. So thanks a lot for joining today, and see you in upcoming Open Hack events. Bye-bye.
Yo, check it out, we got the visionaries in the house. Open FinHack, we finna break it down. Coders, designers, all hustling in the game. Create solutions, taking finance to a new plane. Open FinHack, we break the barriers, we set the pace. Unlocking the future, we taking finance to a new place. Collaboration and innovation, that's a style. Open FinHack, where dreams become a lifestyle. We got the visionaries in the house. Open FinHack, we finna break it down. Coders, designers, all hustling in the game. Create solutions, taking finance to a new plan. Open FinHack, we break the barriers, we set the pace. Unlocking the future, we taking finance to a new place. Collaboration and innovation, that's our style. Open FinHack, where big things soon will arrive.